Hello everyone. So sorry. I thought I was communicating. However, I just saw now that the sound was not coming out from my hand, and I'm sorry about that. I hope you can hear me right now. Once again, I want to welcome you again to yet another promising edition on the Forex Morning Mastery. Good morning from here. And depending on what time zone you're tuning in from, good afternoon and good evening to you. Like I did mention during our during the first sorry. So, during the first day of the week, I did mention that this week will be my last trading week for the year. And so, making this Forex Morning Mastery the last edition for us for this year, only to come back during the second week of the new year. So, welcome everyone. And so far this week, we have been monitoring three financial instruments, which includes the USOILSPOT, the GBPUSD, and the XAUUSD. And in fact, we've done fantastic. We've done pretty well since the beginning of the week. The USOILSPOT, we saw some significant moves. Same thing with the GBPUSD and, of course, the XAUUSD. Now, today we are going to be delving into the market dynamics to understand the behavioral patterns of market participants. And of course, we want to see how well these assets have done since the beginning of the week. And of course, we are going to be using that historical data to strategically position ourselves for the next move. Now, it's also important for us to take into account the psychological peculiarities that comes with last trading day of the week. And for the fact that today is the last trading day, we expect that there will be some profit taking activities which will reflect on the chart as price moving in the opposite direction of the prior leading price action. And when we are coming into some sensitive situation in the global market, especially around the US dollar, where we saw the failure of the US House of Representatives to pass a spending bill to fund the government, hereby increasing the risk of a government shutdown. And we may likely see some significant outflow from the US dollar as market participants prepare for the weekend, because we do not know what may happen during the weekend, and this could be further intensified today. So we are going to be taking all of this into account while we review the current market dynamics. And those of you who are fans of the USOILSPOT, the GBPUSD, and the XAUUSD, you don't want to miss out on this session. So I encourage you to stay tuned in as we prepare to dive into the market. Now, for those of you who are joining us for the first time, you're highly welcome on board. Very excited to have you join us this morning. And the Forex Morning Mastery is it's a live stream that we do 3 times in a week: Mondays, Wednesdays, and Fridays. This is in no way a signal service platform, but instead an educational avenue where we all come together as a community to understand the behavioral patterns of market participants through the lens of price action and fundamental analysis. And like I said earlier, this is going to be my last edition for the year. If you are yet to subscribe to the channel, please do, as I will be sharing some updates as we prepare for the new year, and you don't want to miss out on that preparation. So once again, you're highly welcome on board, and feel free to engage in the comment section, and do not forget to also give that video a thumbs up. Thank you very much, guys, as you do so. I see you in the comment section. Mohammed Ali, good morning to you. Oh, good morning, 3 a.m. Wow, that's great. Good morning to you. Glad to have you around. Hadeni Babalola, good morning to you too. Glad to have you around with us this morning. All right, guys. So, with that said, here we will be diving right into the business, and of course, we will be starting with our usual routine. The first thing we normally do, of course, is to keep tabs with the fundamental factors that have influenced and will be influencing the market today. By checking the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us that valuable information and, most importantly, timing to strategically position ourselves for the next move. Now, based on the asset we've been monitoring since the beginning of the week, we have focused on economic features from both the United States and the United Kingdom economic dockets. Now, this week we had a bunch of events actually, majorly in a high impactful event. In fact, it has been a busy week where the week started with S&P global publications from both economies, a data that gives us an insight into the health and performance of the service and manufacturing sectors of both economies. And from the report we saw on Monday, we had a mixed signal where the manufacturing sector from both economies contracted. Way below 50 and of course below the previous month data, and we saw the service sector of both economies show some resilience. In fact, the data came in higher than what market participants had expected. Well, at the beginning of the week, this was not enough for market participants to make any significant decisions, as the market was just more of going into a choppy transition, as major key players were waiting for that major event coming during the second half of the week. Then on Tuesday, we had some labor oriented data from the United Kingdom, where we saw the claimant count change coming in higher than what market had expected, and the employment change and the high LO unemployment rate came in flat. That means it came in unchanged, and this did not really give a true color of what the labor sector is doing in the UK, making it making the market a little bit skeptical for buyers. Though we had a little bit of buys at the beginning of the week on the GBPUSD, but they never lasted long because there was no key insight into the economy, as key players were definitely waiting for more information from the UK in the form of the consumer price index and of course the Bank of England's interest rate decisions. Then from the US, we saw the retail sales data, a data that gives us an insight into the consumer spending in the United States. And of course, we saw a resilient US economy with data coming in at 0.7%, way higher than the previous month, and of course, higher than the market expectation. And of course, this gives the US dollar a little bit of traction during the midweek, which we also took advantage of. Then on Wednesday, the consumer price index from the UK came in just as market had expected, showing that the inflation in the UK is still sticky, and this further supported the sentiment that the Bank of England will leave the interest rate unchanged. So this allowed the market to price in all of this condition prior to the event. Then on that same Wednesday, we saw the Fed interest rate decision come in just as market had expected. We saw a 25 basis point cut, where there was a was it a 6-3 voting? I can't remember the voting ratio anymore, but the fact that we saw the coming at 25 basis point cut, and we also saw some hawkish remark from the Fed chair where they projected only 2 rate cuts for 2025. So this was quite an hawkish remark, and this further boosted the value of the US dollar. Then on Thursday, the most anticipated data from the UK came in, and that is the interest rate decision. As we saw, data come in just as what market had expected at 4.75%. So it was remained unchanged, and this led to a sharp decline in the value of the British pounds. Then on that same day, we also saw the GDP data from the US economy. For those who don't know, the GDP is a very, very important economic indicator that gives us that measures, let me put it this way, the value of goods and services produced by the US economy in the last 3 months. Now, it gives us how the US economy has expanded overall. And with what we saw here, the data came in higher than the previous quarter, came in higher than what market participants had expected, as we saw the actual figure at 3.1%. So this simply means that the US economy expanded by 3.1% in the last quarter, which is a very, very interesting development, and this further will continue to help the US dollar at this point in time. Now, today, Friday, December 20th, we are looking forward to 2 high impactful events from both economies. We already witnessed the retail sales data from the UK this morning, and we saw a woeful 0.2%. Though there is an increase, well, remember the last month was at a deficit of 0.7%. Market participants were expecting a 0.5% expansion, but it was a disappointing 0.2% expansion. And I think that this may likely continue to exert downward pressure on the pound sterling. So for the GBPUSD funds, we are going to be looking into the market dynamics in detail on that when we get into the chart. Then later on today, about 1:30 p.m. UTC, we will be looking forward to the core personal consumption expenditure from the United States, another important event which gives us an insight into the inflationary pressure in the United States. And majority usually see the core PCE as the Federal Reserve's favorite inflation gauge. Now, this data here measures inflation by tracking prices of goods and services, and of course this excludes volatile food and energy costs. Now, theoretically, a higher PCE reading indicates stronger inflation, which can lead to a stronger US dollar. And if we look at the expectations here today, market participants are projecting a 0.2 and 2.9% respectively for the month-on-month and the year-on-year. So we look forward to see what the actual data will be like. Will it be just as what market had expected, below expectations, or even beyond expectations? So these are the major events we are looking forward to today. And of course, we all know major key players do have insiders in this department, so they have a prior knowledge of what the data will be like, and there is a tendency for them to start positioning themselves ahead of this event. Now, this positioning reflects on this chart as structural patterns that we can actually use to position ourselves for the next big move. So with that said, here we will be diving right into the chart, And as always, the first asset we will be looking at this morning is the USO Spot. Now, on the US All Sport, we've had some interesting situations so far this week. Let me scale up into the 1 hour time frame, which is our execution time frame. So I'm to load that up. I don't know why it's taking some time. Okay, I can remember my US All Sport chart usually take a while for it to load up. So at the beginning of the week, we had an interesting situation after taking into account the nature of price action on the higher time frame, and we were able to identify our key level for this week at the $70.25 level. Now, during the first 12 to 13 hours of the week, price action was more or less trading above the key level. But something interesting was observed within this range-bound structure we identified here. Now, the first thing we noticed here was that the week started on a bearish note as we saw series of lower highs capture the charts on the first trading day. And as a result of this observation, we decided that we will be looking out to sell only at the site of a breakdown retest of the $70.46 level. Now, during our live session on Monday, remember we already saw the breakdown happen and we said we're looking to sell the retest of structure. For those who missed out on this one, we mentioned here that we wait for price to come back, retest the structure to continue the downtrend move, and that was exactly what happened. We saw price continue to the downside from there. And also remember, we had the privilege of maximizing the potential of that bearish move by adding another sell position at the $70.25 level. So as at the first 2 days of the week, we were already doing very well on this asset as we had the first sell position move over 160 pips before the bullish traction resumed, and likewise the second position moved over 140 pips before the bullish traction resumed. So we did very well during the first half of the week. Now, at the second half of the week, we begin to notice some new development, and of course, we were forced to scale down into the 50 minutes time frame. And I did, for those of you who are with me on my Telegram platform, we did updated new structures on Wednesday's trading session, remember? So prior to Wednesday's trading session, this was the new structure we did identify here, a beautiful range between the $69.85 level and the $69.60 area. And of course, to further support the uptrend scenario was the API report that came in prior to Wednesday's session, where we saw crude oil stockpile for last week diminish significantly. And of course, theoretically, this means that the demand in the market was way higher than the supply, causing the eating into the crude oil stockpile, and this further escalated prices as we had the privilege of joining another buy at the breakout of the $69.85 level. Then we also added another one at the break of the $70.15 level, then another one at the break of the $70.35 area. So we were doing very well so far. And then on later on Wednesday, I did updated us on my Telegram platform that we will be looking to monitor how price action reacts to this trend line. Remember, this trend line was identified on the which supported a downward scenario, and that if price will drop below that trend line, we'll definitely join a sell. And with our support line here at the $70.15 level. We were keen on joining a sell from there. We joined that bearish move, and that was about, how many pips was that? About 80 pips before this whole consolidation began on Wednesday stroke Thursday's trading session. We also had the privilege of adding more buys at the $69.65 level. For those of you who are part of my Telegram platform, you will witness, testify to these updates I gave right on that platform. And for those of you who did capitalize on this opportunity, well done and kudos to you. Now, yesterday we saw price drop significantly to the downside, and this was due to a stronger US dollar. And you know how the US dollar and the USOILSPOT are indirectly proportional. The US crude oil, being a US dollar denominated asset, finds selling pressure when the dollar becomes very expensive. So what do I mean by that? So when the value of the US dollar increases, that means the US dollar will become very expensive for other currencies to buy. And if this happens, those who will want to buy the US crude oil will find the crude oil very expensive to buy, and this could reduce the demand. And from our simple economics, when demand reduces, what happens? Price will drop. Now, this was the reason behind this selling pressure. As we saw price continue to drop to the downside, we had two sell positions here. Remember, we marked out two levels yesterday, the $69.50 level, and of course the $69.35 area. And if you still have your sell position running right now, we have 80 pips and 64 pips in profits. But for some of us, I personally was taking out during the early hours of today. Before I came in this morning, price action had already taken me out of my position as I moved my stop losses accordingly. But presently, I do have another sell position triggered, which I will be explaining to you in a moment. But for those who still have a active sell position at this juncture, I encourage us all to move all stop losses to that area around the $68.90 level. Let's ensure that all sell positions are secured at this juncture. Now, in preparation for today and with a well secured position, how do we intend to navigate this market? What is the potentials for the sellers and buyers? Will this bearish momentum continue, or are there any room for buyers to build upon to make a statement to push price to the upside? Well, if you ask me, and based on the current market dynamic, there are really no positive drivers for the US crude oil. We have, at the moment, everything is pointing towards the downside. The path of least resistance continue to look as if price will drop further from this particular juncture, thanks to a stronger US dollar at the moment, making the crude oil more expensive for buyers using other currencies, thereby reducing the demand in this market. Then the Federal Reserve hawkish stance will continue to continue to exert downward pressure on oil prices. The Fed's 25 basis rate point cut, with only two projected rate cuts in 2025, along with the Fed chairman's comment on inflation, supports the US dollar and could adversely affect oil prices. Then there was a recent projection from JP Morgan analysts yesterday. I was reading it, where they expect oil supply to exceed demand by 1.2 million barrels per day, pointing towards a market surplus in 2025. Now, this is not a good news for buyers of crude oil, and this could further depreciate the value of oil prices. And if we also take into account the global economic slowdown, where weakening economic activity and a sluggish Chinese economy are further highlight as factors dampening crude oil demand growth, you would agree with me that oil prices may continue to drop. And in fact, gasoline demand in China has reduced significantly. I think car owners are now moving to electric cars in China right now, hereby reducing the demand for gasoline and diesel, and this could further push price to the downside. Now, if you would agree with me, based on all of these parameters we've discussed here, the path of least resistance seems to go to the downside. Now, heading into today's trading session, how do we intend to navigate this market? Well, the first thing I was able to identify on the 15 minutes time that price action is going through a downward trend, and in fact we've seen price evolve into a descending channel. If you see this, let me zoom in so we can see this clearly. So you can see we have the series of lower highs giving us the resistant line of that descending channel, and then we have the series of lower lows giving us the support line of that descending channel. Though we had a little bit of breakout this morning, as you will see here, but it turns out that buyers were finding it difficult to continue that trend had the breakout retest of that descending trend line. And for the fact that the attempt to break out of the $68.95 area resulted into a shooting star candle here, this for me is a very good signal that sellers are still very strong in this market. So what we are going to be doing today is to look out for patterns and structures that support the idea of selling. Now, for those of us who are yet to what been taken out of the sell position due to where you moved your stop losses to, and you're looking forward to adding more sell position, I am looking to add more sell at the break of the $68.80 level. Though I already have this triggered, but if you missed out on this one, let's wait and see if the market will come back, retest the structure. Now, the appearance of selling pressure here on the inability of buyers to break out of that resistant line will be a good signal to continue the downtrend move. So we will continue to maintain selling pressure here today as long as price action remains below the $68.80 level. So let's see how this is going to play out today. And of course, we have the support line of the descending channel right here. If price can break down, retest the support line, we will definitely be adding more sell to our existing sell position. So a bearish bias on the USOILSPOT today. Now, like we always do here, what are the chances that buyers can come in? Well, from fundamental factors, there are no chances for buyers at the moment, but we never can tell. Anything could happen. The market is an uncertain environment, and if I am going to consider buying at all in this market, I would want to see consistent buy pressure, like higher highs and higher lows, before looking out for buying ideas. And if there are any that comes up today, I will definitely update us on my Telegram platform. But at the moment, everything is looking very bearish. I maintain a bearish bias, and we shall continue to look out for structural details that will support more selling opportunities. So this is my simple view on the USOILSPOT for today. I hope I made myself very clear. So I will take some 5-10 seconds off. Let's see if there are any questions whatsoever, or you need some further clarifications. Feel free to let me know in the comment section. So let's take some break, and I will be right back in about 10 to 15 seconds. And if you are yet to give the video a like, please do so right away. And thank you very much as you do so. All right. So, in the absence of no questions, I want to take that as a confirmation that we are all on the same page. So, with that said, here, let's move on to the next assets. I hope you've marked out the structures accordingly on your charts. This is what we are going to be using to help us navigate this market today. It's on a 15 minutes time frame. Please take note of that too. So moving on to the next asset on our watch list. So the next asset we are looking at this morning is the GBPUSD, that is the British pounds against the US dollar. And as at the beginning of the week, after taking into account the character of price action on the 4 hours time frame, we were of high hopes that the momentum will continue to the upside. And looking at the structure we were able to mark out, remember our key level for this week was at the 1.26150 level. My key levels are always pink in color, and you know how we use our key levels. As long as price remains above them, we will continue to look out for patterns and structures that support the idea of buying, and we will not be selling unless this key level breaches to the downside, except for rare cases where we have opportunity to sell before the breakdown of that key level happens. Now, in addition to that key level was the fact that price oscillated around the key level for about 3 to 4 hours, where we saw a range bound structure between the 1.2619 and the 1.26080 area. And you know how we use our range bound structures. Whenever we identify them, we exercise patience, waiting for price to either break out of the structure to give us buying ideas or break down the support to give us selling ideas. And prior to the beginning of that of our Forex Morning Mastery on Monday, I told us that I already buy the break of the key level, and then I did mention that for those of us who missed out on that buy, that we should be looking at a breakout retest of the 1.26360 to continue that uptrend move. And look at how what happened here. If you missed out on that break, the market was so kind enough as it came back, retest the structure, and boom, price continued to rise to the upside. And in fact, we had the privilege of maximizing the bullish momentum. We were able to add more at the 1.26645 and of course at the 1.2772700 area before the selling pressure resumed on Wednesday. And this selling pressure that resumed on Wednesday was an immediate reaction to the hawkish stance from the Federal Reserve chairman after the 25 basis point cut was announced on that day. And if you are with me on my Telegram platform, remember I did give us an update prior to that event that we will be using to navigate that market. Let me show you. So we had a structure on the 15 minutes time frame prior to the release of the FOMC. This was it right here. So we had a beautiful structure right here, and we said we will not be selling unless this demand zone is breached and broken to the downside at the 1.26835, and this was the beginning of that strong bearish move as we saw price move over 100 pips into the 1.257 area. Now, during my commentary on Thursday morning, I gave us a new structure on my Telegram platform after identifying a consolidation phase which evolved into an ascending channel, as you will see here. So we marked out a couple of levels to help us continue the trend. So we were saying here that we will buy the 1.26, and if price breaks further above the 1.2615, we will buy again. And of course, look at how beautifully price respected that. We saw a 60 pips move on the first buy and about 50 pips move on the second buy before the bearish momentum began. And depending on where you moved your stop losses to, you must have been taken out with a modest size of profit. Then we also had a sell triggered during the New York session yesterday. Remember, we said the only condition that will make us sell this market is for price to break down the 1.259, which we have considered to be seller's territory, and is also below the support line of that ascending channel, making it quite an interesting area to join a sell. And if you still have your sell position running, you should currently be running with about 97 pips. Personally, I've been taking out, I was taking out by the time I came back this morning, I was taking out, I think I moved my stop loss to around the 1.249, so I was taking out of that one. But if you still have your sell position running, kindly move your stop losses right now, secure your position maybe around the 1.251 or the 1.252. Let's ensure everything is intact. Remember, today is the final trading day of the week, and there could be a shift in momentum as market participants take some profits off the chart. Now, as we prepare for today's session, what are our chances? What is the sentiment in the market banking on? Is it favoring the buyers or the sellers? Well, the only thing I could say that could favor the buyers is the UK retail sales growth, which we saw at 0.2% this morning, but it was below the expectations that market participants are projected. And for me, I don't see this as a very good parameter that can support that uptrend potential recovery at this point in time. The reason why I have said this is basically due to a lot of other factors behind the scenes as well. We have a resilient US economy at the moment. We saw strong US data with initial jobless claim below market expectation. We saw a GDP growth of 3.1% in quarter three, signaling a robust US economy and has a tendency of strengthening the US dollar against the GBP. Then there is also the tendency around the US Treasury bond yield to continue its momentum, and this may also put downward pressure on the British pounds. Then the Bank of England's maintaining its interest rate at 4.75% with a dovish signal might not also bolster confidence in the pound sterling. We saw a 6-3 vote split with consideration for future rate cuts, which is not an interesting thing for any investor at this point in time, considering the return on investment against the US dollar. And of course, the disappointing UK retail sales data are not looking promising for the GBP at this point in time. Now, the question here now is, how is the market participant, how is the majority of market participants digesting this information? Are they willing to continue the downtrend at this juncture, or is there any chance of profit-taking activities that could give the pound sterling a little bit of hope ahead of the weekend? Now, to help us navigate this market today, I have a new technical detail here, And what I was able to come up with is a what do we call this pattern again? A falling wedge. Yes, a falling wedge, which is usually considered to be a reversal setup. So let me give you a visual representation of what I mean here. So following this impulsive bearish leg, we saw the price evolve into a consolidation phase. And as you will see, we have a falling wedge right here, and from a theoretical standpoint, this is a reversal setup where the breakout of the resistance line will be a good confirmation to continue an uptrend scenario. But in this case scenario, we've already missed this. This happened during the early hours of today. I think this was after the UK retail sales data, I guess. Yes, it was after the retail sales UK data. Now, our price has moved very well. And one thing I'm beginning to notice here is the inability of buyers to continue that momentum. And if you look at this, you will see that we have a resistance around the 1.25100 level. So let's mark that out. We have the 1.25100 level, a very strong psychological level considering the round figure of that price. And look at what happened earlier. Yesterday we saw this area serve as a selling niche, buyers finding it difficult to break through, as you will see here during the Asian session. And recently buyers are still finding it difficult to break through that level, though there are some attempts here to continue to knock that ceiling. And what do I mean by attempt? Well, if we take a closer look at the character of these candles here, you will see we have multiple hammer candles here, about 3 or 4 of them, which theoretically tells us that buyers are still present in this market. Now, if you look at about 25 minutes ago as well, you can see we have a hammer candle here showing us that buyers really want to break out of the 1.251 to continue that uptrend move. Now, with this said here, what I will be doing now is to acknowledge that support line here, making it the support line for today's session. Let's see, should it be 1.25? I think 1.25 will do just fine. It's another psychological level, so let's put it at 1.25000 level. So we have that there. So we have a support line now. Let's bring back our candle chart. All right, beautiful. So we have a support line. We have a range bound structure which has evolved in the last 3 hours as price action is confined within the 1.25 and the 1.251. Now, you know how we use our range bound structure whenever we identify them. We exercise patience and wait for the negotiation between the buyers and sellers to be fulfilled, where the breakout of the resistance line will confirm that buyers have won the negotiation and that price will continue to the upside. And if price breaks down the support line, that means sellers won the negotiation and this could incite a further downtrend scenario. So let's talk about the bullish potential here first. And now, since we have a reversal pattern in place, so for us to buy now, we will be looking at placing a buy stop order above the 1.251 after taking into account the presence of buyers around the 1.250. So we are buying above the 1.25100 area, and let's ensure that we give enough breathing space. So stop losses will be between the 1.25 and 1.24920. So we are looking at between 15 to 18 or 20 pips of stop loss on this buy position. So that is the only condition that will make us to buy from this particular area. Now, to sell the GBPUSD, we will need price to take out all the buy positions around the 1.25 area. And for me to sell, I will not be placing a sell stop order right away, as I will need some confirmations to happen. And what do I mean by that? I would like to see price break down the 1.25 first. I want to see a signal. Then I want to see signs that the breakdown has come to stay and that buyers will be finding it difficult to climb back above the 1.25 area. And this will reflect on the chart as continued selling pressure right on the lower time frame, maybe around on the 5-10 minutes time frame. And this will be all I need to continue the downtrend move. So it's a simple trading setup we have here on the 15 minutes time frame. So for the sell, we are waiting for confirmations to happen, but for the buy, we are placing a buy stop order above the 1.251 area. So this is how we will be navigating this market today. So I encourage us all to identify this, mark out the structures on our chart, as we are going to be needing it to guide today's decision. Let me simply put this again. Based on the fundamental factors in the market, the path of least resistance for the GBPUSD is still looking to the downside. But due to the fact that today is the final trading day of the week, we may see profit-taking activity happen. And if you're buying, please note that this is a counter trend opportunity, and as soon as price moves significantly in your favor, ensure to move your stop losses accordingly and secure that position, as sellers could come back into the market at any time. So that is my simple idea on the GBPUSD for today. I hope I made myself clear. If you have any questions whatsoever, feel free to let me know in the comment section. So I will take the next 5-10 seconds off. Let's see if there are any questions before we move on to the final assets on our watch list today. Stay tuned in. All right. It appears we are all on the same page. So with that said, let's move right into the final asset on our watch list. So the final assets we are looking at the moment is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And what a tremendously profitable week we have here on this particular asset. Though we started the week with a buy idea, remember, after we identified this range bound structure. We bought the breakout of that resistant line at the 2653. We saw the first attempt move about 100 pips, while the second attempt failed as we got taken out of that position, giving us our first loss on this trade at the beginning of the week. And since then, we saw price continue to drop to the downside ahead of the FOMC release, and we saw price continue to drop, as you will see here. And we had multiple, in fact we had multiple, I think we had about 6 structures during the course of the week to help us capitalize on the opportunities the market presented. Let me see if I still have them here. So I think we had on Tuesday, we had about 2 on Wednesday. Okay, so this was on Wednesday. That was prior to the FOMC. We had a trading setup where we were looking at selling. We sold the breakdown of the 2645 right here. Then we added another one at the breakdown of the 2642. We rode that momentum all the way to the downside. Let me see what's happening to my charts. Okay. And for those of us who are part of the Go Challenge tools, where we were able to increase our portfolio this week, scalping the gold market. Hold on a second. I'm trying to look for the follow-up updates I shared on is it this one? I'm not sure if I can still find it. Okay, I think this is it right here. So this was the follow-up update. So this was on Wednesday, and then we had a situation yesterday morning. Let me show you. So we had the situation yesterday morning. So first of all, we have a strong descending trend line, which price action had respected since the FOMC release. And look at how price has been finding lower highs since the FOMC release, showing us signs that sellers are getting stronger by the day. And then yesterday morning, we saw this opportunity to buy the breakout of the 2616. I hope you all remember. And we saw price move about, how many pips was that? About 80 pips thereabout before this bearish momentum began. And when I observed this bearish momentum, I think I did some observation for about 30-40 minutes. I immediately updated us on my Telegram platform that it appears things are evolving into a downtrend scenario. And considering the fact that selling pressure is resuming along the descending trend line, I said that we will consider selling if price action breaks down to 2616. Now look at how that 2616 also shares a confluence with this temporary ascending trend line. So all of it was just in line with the bearish idea, and of course we joined a sell at the 2616. I updated us again when price got to 2607 on my Telegram and TradingView platform that we will monitor price action around the 2607 to add more sell positions to our existing trade. I personally had my TP target at 2,595, so I closed the first position with about 200 pips and the second position with about 120 pips, though price moved further to the downside. And then since the later part of yesterday's stroke, the Asian session, we have seen a little bit of consolidation take over this market. Now, heading into today's trading session, a little bit of twist has come into play, though we have the potential for outflow from the US dollar into the gold asset. And why is that so? Well, we have the persistent geopolitical risk, we have the trade war fears, that is the situation with concerns about U.S. President-elect Donald Trump's tariffs plan, which may drive even flow towards gold at the moment due to the uncertainty around it. And then we also have, as of this morning, a looming threat of a U.S. government shutdown, which is as a result of the failure of the U.S. House of Rep to pass a spending bill to fund the government. Now, this increases the risk of a shutdown today, actually, and due to this uncertainty, we may see outflow of safe haven, outflow of the US dollar into gold for to serve as an edge against any form of uncertainty. Now, we also have a modest pullback in the US Treasury bond yield at the moment due to the global flight to safety, and this may cap the recent US dollar rally and support gold prices from here. However, in as much as everything is looking very rosy for the gold commodity at this point in time, I will not want to ignore the Federal Reserve hawkish outlook, and market participants, I think, will be holding this in high esteem as the Fed signal to slow the pace of rate cuts in 2025. And we also have positive economic indicators such as a higher GDP growth, lower than expected jobless claims, which of course reinforce the Fed's hawkish stance, and then the anticipation of the US core PCE coming up later today. That's 1:30 p.m. UTC, 2:30 p.m. local time, and this upcoming release could also influence the US dollar price dynamics, hereby causing a little bit of caution among investors at this point in time. So, and due to this uncertainty, there could be a prevention of any form of aggressive bet right now. So you can see it's quite a complicated situation at this point. But if we take a technical dissection of this chart, looking at how the market is digesting this information, you will see that price action is back at that trend line, which has been supporting the bearish momentum since the FOMC release on Wednesday. And one interesting thing about it is that as soon as price got into that trend line, I updated us the structure. For those of you who are with me on my Telegram platform, I updated us this morning. This is the trend line here. Now look at what happened when price got into the trend line. We saw a little bit of consolidation phase for about how many hours now? 1 2 3 4 1 2 3 4 1 2 3 4. That's about 3 good hours. Price action has been oscillating around that trend line, giving us a range bound structure between the 2,607.50 and the 2,604. Now, if we consider the idea behind a potential threat of a U.S. government shutdown, which could prompt outflow from the U.S. dollar into the gold commodity, well, the breakout of this trend line will be a beautiful opportunity to buy. But due to the fact that there is uncertainty around this area, I would want to exercise patience and wait for price to break out, retest the resistance line at a $2,607.50 level before continuing the uptrend scenario. But if I am scalping, for those of you who are going to be part of the Go Challenge session, I will be looking at scalping this area before that breakout happens. But from a long-term perspective, we'll just wait for price breakout of the 2,607.50 to join the uptrend. And please, ensure you have a wide range of stop loss, as you want your stop loss to be way below the support line. That's about 37 to 45 pips, depending on how where your entry point is on this one. So I still maintain a bullish bias due to this threat of government shutdown, and considering that we are heading into the weekend where there is no market opening during the weekend, so major key players may want to be very careful of not investing too much in the US dollar at this point in time. So we will look at buying the breakout of the 2006-0750. Now, if we consider the strength of the US dollar and the resilience in the US economy, if that is what will be the driver of the sentiment in this market, well, price dropping back below that descending trend line will be a good opportunity to sell. However, looking at the support line at the 2006-04, you can see sellers have been struggling in the last 3 hours to break through. So I would rather want to see a confirmation before jumping into a sell. So if price breaks down, I will not bulge, I will not do anything. I will wait patiently for a retest of structure, maybe on the 1 minute, 5 minutes or 10 minutes time frame, or even the 15 minutes time frame, confirming that buyers are finding it difficult to maintain momentum above the trend line before jumping into that sell. So our center of focus today is within this range bound structure, and if you are not careful, let me state this here, I'm talking out of experience. If you are not careful, if you're trying to trade within this range, you might lose all the profits you made so far this week, because this is an indecisive phase and you will just continue to go in and out, go in and out. We don't know how long this sideways will go. Maybe the decision will only be made after the release of the US core PCE. So for me, I would say stay clear of the market. Let's wait for this negotiation to complete. Let's see if it's going to be the buyers or the sellers that will win this negotiation. But if you would ask me personally, I think that buyers will win this negotiation due to the uncertainty surrounding the failure of the U.S. House of Rep to approve the funding of the government, and this could lead to buying the breakout of the 2006-07. But I remain open to the idea of selling the breakdown retest of the 2006-04. So that is my simple view here on the XAUUSD. So it's a simple setup, a range bound structure. Let's wait and see who is going to win this negotiation process. If you have any questions whatsoever, feel free to let me know in the comment section. So I've come to the end of my analysis on the XAUUSD. I hope I made myself very clear, but I will wait for about 10-15 seconds. Let's see if there are any questions before we start rounding off on today's Forex Morning Mastery. All right. So I'll take our silence as a confirmation that we are all on the same page and we are very much ready and good to go this morning. So I want to wish us all the best of luck on the XAUUSD. So it's on this note, I think we have come to the end of today's Forex Morning Mastery. It has been a great moment with you guys, a great year, a great week. And we hope to end this week too on a much more better note as we look forward to new trading opportunities today. So we were able to take on three assets as always: the USOILSPOT, the GBPUSD, and the XAUUSD, where we were able to identify simple trading setups that we are going to be using to navigate the market today. And I do hope that you guys did mark out the structures accordingly as we have done during the course of the session. If you had done so, well done, kudos to you. So all we need to do right now is just exercise patience and allow the structures to mature before jumping in. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, ensure to have a well-defined risk management strategy which must, and I say must with emphatic, must be consistent with all the trades you take from that portfolio. And for those of you who joined us for the first time, I do hope you are able to gain one or two things from what we have discussed here today. And of course, you would love to be part of our subsequent edition, which will be the second week of next year. Like I said earlier, this is my last trading day for the year. So next year, we are going to be coming back again. So I would encourage newcomers to click that subscribe button so you don't miss out. Click the subscribe button, join me on my TradingView platform, join me on my Telegram platform, and of course my Twitter account so that you don't miss out on updates as we prepare for the new year. So I want to wish us all a happy new year, a Merry Christmas in advance, but spending that time, I will always communicate with you on my Telegram platform. So I wish us all the best of luck today. I wish you a wonderful weekend. Trade smart, trade consciously, and to have a wonderful evening, everyone. Bye.